Hello everyone, this is Mohammad Shad Khan from Sheikh Anwar Accounting and Auditing LLC. In today's video, we are going to discuss very important change introduced in the UAE VAT and tax procedures which will be effective from 1st January 2026. These amendments may look procedural, but trust me, they can directly impact your VAT refund, credit balance, compliance exposure, and audit risk. So, if you are a VAT registered business, accountant, tax consultants, or business owner, this video is extremely important for you. Let's understand these changes step by step in simple language with practical implications. As we all know, UAE follows a federal tax framework where VAT at 5% on the supply of goods and services subject to exemption and zero rating to strengthen tax administration certainly and control. The UAE Ministry of Finance has issued Federal Decree Law number 17 of 2025 amending selected provision of Tax Procedures Law. These amendments will come into force from 1st January 2026. Although these procedural amendments they materially affect how business manage VAT credits, refunds, error correction, and audits. Earlier, VAT registered business could carry forward excess VAT credit indefinitely, claim VAT refund without any clearly defined statutory time limit. New rule effective from 1st January 2026. Now, from the first time, the law introduced a statutory limitation period of 5 years to claim VAT refund or use VAT credit balance against further VAT liabilities. This 5-year period is calculated from the end of tax period in which the VAT credit arose. This change is extremely critical. Any VAT credit or refund not claimed within 5 years will lapse permanently. Business holding large accumulated VAT credit face real financial losses risk. Proactive monitoring and refunds planning become essential. If you are sitting on old VAT credits, you must act now. Earlier, even a minor clerical or reporting mistake, business were often required to file a voluntary disclosure regardless of whether the error affected VAT payable. Error that do not change VAT payable or refundable can be corrected through subsequent VAT returns. Such corrections are subject to FTA procedures. This is a big relief for the businesses, reduce compliance burden, lower penalty exposure for clerical mistake. Voluntary disclosure is still required only when the tax payable, refund or assessment is affected. This law formally introduced a 5-year limitation period for submitting VAT refund application. Recognizing historical VAT credits, the law provides transitional relief allowing certain VAT credit arising before the new rule to still be claimed. A specific exception where credit arise after expiry. Additional timeline as prescribed by the Federal Tax Authority. Business holding VAT credit must act urgently. Failure to comply with the transitional timelines may result in permanent loss of VAT credit. A strong reconciliation of historical VAT position is now absolutely critical. Although these amendments are procedural, they clearly reflect a policy shift towards time-bound tax rights, greater certainty for tax authorities, increased scrutiny for VAT refund and credit, higher expectations for the record keeping and compliance discipline. VAT registered business should accept closure review of refund claims, increased audit exposure for historical VAT position, strong emphasis on accurate and timely VAT filing. To summarize, business should immediately review all historical VAT credit balance, track VAT credit against the new 5-year deadline, update the initial procedure for error identification and correction, prepare for stricter refund scrutiny and audit, ensure proper documentation is maintained for all VAT position. These VAT amendments are not just legal updates, they are financial risk management tool. If you need help reviewing your VAT credits, refunds or compliance exposure, feel free to reach out to us. If you found this video useful, like, share and subscribe to our channel for more UAE VAT corporate tax and compliance update. Thank you for watching.